Opendoor stock just closed out the week with a bang, up over 14% on Friday to close at $2.10. And what's even more interesting, the move didn't fade in after-hours trading. In fact, we're seeing signs that momentum could carry over into Monday. No earnings yet, no big press release, just strong price action backed by a reawakening retail community and, most importantly, a setup that's looking more and more bullish by the day. Let me be clear, this isn't just about another meme rally. What we're seeing right now is a stock that's beginning to align across several key indicators. You've got technical strength, a confirmed Nasdaq compliance milestone, a cancelled reverse split vote, a heavy short interest, and the perfect timing catalyst in the form of earnings next week. All of that adds up to a story that's just getting started. And I think Opendoor might be coiled for something much bigger, a possible short squeeze that catches the market off guard. Let's start with the facts. The stock closed Friday at $2.10, up 14% on the day. That move pushed Opendoor even further above the $1 compliance threshold, locking in the 10-day average price Nasdaq requires. And guess what? That allowed the company to confirm that it is now officially back in compliance with Nasdaq's listing rules. That means the risk of delisting is now off the table, at least for the near future. And what happened next might be the biggest tell yet. The board cancelled the reverse stock split vote that was originally scheduled for later this month. That move matters. The company could have gone ahead with a reverse split just to be safe, just to give itself some cushion. But they didn't. They pulled the vote. Why? Because they're confident. Confident that the stock will hold or climb further. Confident that next week's earnings might actually provide the justification to rally on fundamentals. Confident enough to let the price speak for itself. Now, zoom out a little, and here's what else is going on. Opendoor is one of the most shorted stocks on the market right now. Estimates put short interest well above 20% of the float. That means that millions of shares are currently bet against this company. And here's the kicker, many of those shorts are now underwater. Think about that. Shorts that piled in when the stock was around $1.30, $1.50, even $1.80, they're now in the red. And with earnings just around the corner, they're sitting on a powder keg. If the stock pushes even a little higher, they may be forced to start covering. And when shorts cover, that's buying pressure, on top of whatever buying pressure is already coming in from retail and traders. So what we're looking at here is a classic short squeeze setup. We've got a stock that's moved from being an under $1 delisting candidate to a $2 breakout play in the span of a few weeks. We've got retail sentiment roaring back. Opendoor is now one of the top trending tickers across Reddit, StockTwits, and FinTwit, sitting right alongside Reddit stock itself. We've got technical momentum, growing volume, and improving market structure. And we've got earnings in a few days. That's the kind of setup that can trigger parabolic moves. And the timing couldn't be better. So let's talk about what could happen next week. Opendoor is expected to release Q2 earnings. Now, Wall Street still has its doubts. But here's the thing, Opendoor doesn't need to post perfect numbers. They don't need to blow out revenue or show massive profits. All they need is proof of progress. If they show even modest improvement, positive adjusted EBITDA, narrowed losses, better conversion metrics, that's going to do two things. First, it'll validate the board's decision to cancel the reverse split vote. That sends a clear message to investors, we're not desperate. We're not flailing. We're turning the corner. Second, it'll provide the justification that retail traders are looking for. Right now, a lot of the momentum is speculative. But if those fundamentals come in better than expected, that speculation quickly becomes conviction. And when conviction meets high short interest, we all know what happens next. Just look at what happened with Carvana last year. Similar story. Heavy short interest, a struggling business with some signs of life, earnings that were better than feared. The stock ran over 400% in a matter of weeks. I'm not saying Opendoor is guaranteed to do that, but the conditions are eerily similar. Let's also talk about the chart. Technically speaking, Opendoor has reclaimed its 50-day moving average. Volume is increasing on green days and fading on red ones. The breakout above the $2 psychological barrier is meaningful. If we hold above $2 early next week, it sets the stage for a potential run to the $2.50 to $3 zone. And if earnings are strong, that could extend even further. Don't forget, this is a stock that was trading above $8 not that long ago. The float is tight, the retail crowd is engaged, and options activity is picking up. The ingredients are all there. So what am I watching next? First, I'll be watching pre-market volume on Monday. If we see early strength and buying interest, that could indicate continued positioning ahead of earnings. Second, I'll be watching the options market. Specifically, short-dated calls. If we see a surge in volume there, it's a sign that traders are expecting a move and potentially looking to force dealers to hedge by buying the underlying stock. Third, I'll be watching Reddit and social sentiment. If Opendoor stays one of the top trending tickers, and buzz increases leading into earnings, that could push FOMO into overdrive. And finally, of course, earnings themselves. The date hasn't been officially confirmed at the time of this recording, but consensus expects results early in the week. That's when the real fireworks could begin. So where do I stand? I'm bullish. I think this setup is real. I think the combination of technical breakout, board confidence, high short interest, and upcoming earnings makes this one of the most compelling short squeeze candidates on the market right now. Could I be wrong? Absolutely. If earnings disappoint, or if the housing market softens again, this stock could give up some of these gains. But from a risk-reward perspective, heading into next week, I believe Opendoor is one of the most interesting names out there. And the best part? We're not just speculating blindly. The company just proved it can stay above compliance. The board just showed they're not panicking. And the market is responding. This isn't just a bet on hype. It's a bet on momentum, timing, and the possibility of a turnaround. And those bets, when made carefully, can pay off big. So keep your eyes on open. Monday could be quiet. Or it could be the start of something a lot bigger. Thanks for watching. Drop a comment with your thoughts. Are you holding Opendoor into earnings? Are you looking to buy the dip, or ride the breakout? Whatever you do, stay smart, stay informed, and stay bullish.